All right, good Saturday morning. Welcome to the weekly meeting, 9/16. Um, so over the last few weeks, we kind of been talking about the same thing. Um, we've been talking about the setups that we take, what they look like, what it looks like on the charts, and I kind of want to get past talking about the same thing. I know we're going to lose some people, but that's how it works. Um, if you're lost, reach out. If you're stuck, it's probably has more to do with your lack of study time, right? I don't know what your study habits are or how much time you spend, but if you're not caught on yet or caught on to the concept, then it more than likely requires you to do a little bit more. Okay, so I'm going to recap one more time, and then we will take this a step further. Doesn't matter what time frame. In this case, we're looking at the 1 hour chart. We can see that we're getting lower highs here. Eventually, price breaks out, breaks this swing low. If you look, we were trading in a range. There was an impulse move. Price came back. It pushed up. It did not break the high. Came back, broke this low, broke this low, broke this low. Eventually, this swing low, right? Price comes down, doesn't quite break this low. If, as a trader, you get this double bottom, you got to look and see where this retracement is going up to. You could trade it back up. If you know that it's going to fill this imbalance, that's what we're trading. We're trading based on the concept of we got to push down, we broke swing lows, price is going to pull back to mitigate this imbalance. All right. There are several ways that you can approach this trade. I'm not going to get into every last one of them, but in a nutshell, you throw the fib on it. Price came in between the 62, right, 61.8 and the 78, and now it's turning around to push back down. Easy retracement, easy trade, easy money, right? It doesn't necessarily have to be on the weekly. Like this is the concept that I trade on the higher time frames, just the same way that we traded on the lower time frames. Now, if you don't understand this concept, then you need to spend more time over the last, I don't know, 3 or 4 weeks of videos that we've put out. A lot of people will sidebar me and tell me, hey man, the videos are too long. And all I can tell you is go find a shorter version on YouTube, right? And I don't say that in a mean way, but what I'm trying to explain to you is all this information that we are talking about here is on YouTube. This very concept is on an ICT video, 2022 mentorship video number 3. Same exact concept, right? He talks about how price breaks structure, how it comes back to the imbalance, and you can take it to a discounted level. It's the same exact concept. Okay, so if you understand that, let's take this a step further. Okay. So going into this week, as a matter of fact, it was a 2-week order block. 2-week order block last week, right? We expected price to push back up. In fact, I'm just going to break this down. How do I want to do this? I want to get rid of all this crap. Okay. Last week, we got the 2-week order block. but I'm going to have to rewind a little bit so we can analyze this pair and we can understand the thought process. So I'm going back to this monthly because the original thought, the original reason why we were trading this down is because at the end of the month, we knew that price needed to push back down based on the retracement of this monthly joint. We knew that we could take this price at least to the 62, maybe all the way to the 78. Probably going to get wick to wick action here on this monthly order block, right? Everybody understands that this is a monthly order block. I didn't label it, but this is a monthly order block. I know y'all little color hounds. What color y'all want it? Blue?
Green.
Blue.
Okay, we'll just make it green and blue. All right. This is an ugly green, but I just don't want to hide the candle. This is a monthly order block. Now, we know the monthly candle needs to retrace. We figured that this candle would push down into this order block. It's a good chance that it hit our 78. That is just the thought process when we caught this 2-week candle last week. So coming into last week, we wanted to fib this candle. We're going to mark it up the same way. We're going to mark our zone. We're going to mark our 78. Get rid of this. What was that? Okay, that was the first fib. This is the second fib. Okay, so I'm going to drop my fibs. So going into last week, we thought that price would push back up into this area, then push down. Okay, on this 4-hour chart, on the 4-hour chart, what we need to pay attention to is this low, right? This is our swing low on the 4-hour. Is that correct? This high. Right? Now, we can change the color of these lines if you want, because we do have another line in here. Let me just change the color. What color y'all want the swing high line?
Or you can just add text to it, Todd. Just add text if you don't want to change the color.
Well, I don't,
No, click back onto the line again. No, take off the text box, click onto the line again. Yeah, double click it. Yeah. And then, yeah, settings, and then text. And then click on the text box. Yeah, and then enable text, and you can write.
Swing high.
Yeah, and then if you click on text alignment, and just put it in the middle, the arrow.
Middle? Okay.
Yeah.
So y'all are good with that? 4-hour swing high?
Yes.
Okay. So this is your 4-hour swing, right? Y'all tracking?
Yes.
Yeah, we following along.
This is your 78. Let me just mark this as 78, okay? Just so no, I know the next thing is, well, I don't know what that line is. This is your 2-week 78% pullback. Is that right? Let me go to the 2-week just to make sure. Okay. So all my lines are marked. This is the monthly.
There's no food, August.
Okay. So everybody's tracking, right?
Yes.
So what we expect to happen is what? Anybody?
Buy to sell.
Okay, buy to sell. So what we want to see, let me just drop down to the hour so I can see if there's any local highs here. Okay. I need to see this first level of high being broken, right? Which I see right here. Does everybody see that?
Yes.
This is very important. When this high is broken, this is your chalk. I can throw my fib here. I can look for a long anywhere from this position here. I want to cover this swing low, right? About a 42 pip joint. I can probably take this to my 78, right? Or somewhere in between the 78. I just have to kind of gauge this. It's about a 200 pip move. This is kind of what my trade setup would look like, okay? Everybody agree with that?
Uh-huh.
Okay. Notice price comes right down. It doesn't break our swing low, so we're in great shape. Now, here's where the problem here. We broke our swing high, right? This is the swing high up here on the 1 hour. We break the swing high, which we should be elated. The only problem is this high right here was created at 5 o'clock, right? When this wicked, this was on London shift. It wicked the high and it started pushing down crazy. I was in this trade. So I'm up 82 pips. I'm up heavy in profit. But then when I see this wick forming, it doesn't look right. I looked at EA. EA was a better setup of the same thing. EA and GA. They were a better setup of the same thing. And for me, it looked like liquidity runs for price to push down. So I closed my trade out somewhere around the 74, 2174. I closed the trade out. And this immediately comes down, wicks our low, right? By this wicking the swing low, this invalidates any buy. You understand that?
Yes.
Any buy that we had using this as a swing low is now invalid. It's not valid because this wick means that we're pushing lower. So immediately, once you would, like if you didn't recognize this for what it was when it was pushing down, you would have lost that trade, which is cool. If you kind of understood what stop runs look like, then you may not have lost the trade. But in any case, you would have lost this trade. What is it, Leandra?
When you said on the 1 hour that price was, you're waiting for that high to be broken, I thought that when you're waiting for a high to be broken, that the body of the candle has to
No,
break it.
that's not true. You need to go back and look at break of structure videos.
I mean, if you're expecting something to go bullish or go long, then you would wait for like the whole body to break
No,
above
that's
that.
not true, Leandra. Leandra, listen to what I'm telling you. Just go back and look at break of structure. Look at break of structure. On some level, this wick is actually bodies.
Yes, I understand that. Yes.
So if it breaks your swing area, then whatever trade setup you have based on that is invalid. You want this break right here. That's what I want. I wanted that break, which is cool. But I don't want it to break and run, right? I don't want to see this wick develop. It shouldn't be falling that fast. So there's a difference in a stop run and what you see in a break. If you get a break, you're not going to get some cascading candle like this. Just like this break. You got this break, and then this candle takes time to build. It's not just some wick. It's totally different. But it's just the chart time is going to allow you to see the difference. But I told the I don't know, Selena and them they should close this trade out. Then it comes down and immediately breaks this low, right? So once you get this low break right here, right at this 5 in the morning candle, now I'm looking for longs. I mean, I'm looking for shorts. So if I'm looking for shorts, now I have to take the fib in the opposite direction where this candle started to this low. Here's the 78. Here's your zone. We need to be looking in here for what? Anybody?
Imbalance.
That's right. It doesn't change. So when as soon as you drop down to the 15 minute, you can see this candle, they both have imbalances, right? If you drop to the 5, it even shows you, to me, more clearly right here at the 78 where there's imbalance. So I'm not saying you had to take the buy up, right? You didn't have to necessarily take the buy up, but you could have waited to look for the buy, right? Even though I took the pullback, right? I took the buy up. So we're going to play this out. If you are looking for shorts, you can use the same principle. You can use the 62 and just cover the 78, right? Because you don't want to get wicked out. And you can take the short starting from here, right? That would be equal lows, but your idea, our idea for this trade is to go where?
Bearish, because we have bearish order block.
Right, but where is it going?
Was not the 78 of the 2 week or the monthly? No, the monthly.
The monthly, right? So at this point, if you would have recognized, right, that break of that 4-hour structure, even if you had lost that trade, it puts you in a great position to catch a 12-1, right? And let's just say this is not going to make it to the 12 spot or whatever, right? Here's lows right here, relative equal lows. There is another target here. There's another target here. Now, these target lines, right? You can play these by ear as the week or as the weekend draws near, right? So let's just play it out and see what we get. Okay, this you're wicked out, but if your hedge picks up, you're still. Wait. Okay, so my stop loss was a little too close in this scenario. So let me go back. Okay, if you cover the top of this 15-minute candle, if you cover the top of that 15-minute candle, you'll be good to go. So instead of having a 1 to 12, you would have had I don't know, a little bit less. But if you use a hedge, then it wouldn't have mattered. My point is it pushes down until Friday at 03 in the morning. So if you trade London, let's say you're trying to get this entire move, and it pushes down in London. When you get this push up that breaks this high, what is that? Anybody? There you go. It's chalk. It's telling you that your down move is over. So it's not saying that it won't move down anymore, but it's telling you that it's retracing. It needs to move back up. So instead of killing the trade here, you can throw the fib on it and get out at the 62. When it pulls back, you can get out at the 62. I would get out at the 62. I wouldn't try to wait until the 78 because it's not really a guarantee that it goes to the 78. Most of the time, you're going to get the 62. So you could have ended this trade in profit right here at the 62. 4% on that move right there. Even though it changed it didn't go the direction we thought originally, because you saw the highs or you understand which swings, what the swing highs and the swing lows and how they're getting broken, you can follow price. UJ did something similar to this. And, you know, I was talking to TT about that trade. That's why I gave you that number. Do you remember that, TT?
Which number?
Well, it's in the chat. I don't know. I said if it breaks.
Yeah, 154 something.
Yeah.
Oh, you're saying if it break a number? Yeah, if it broke that number, then close out because it's breaking a high at that 1 hour.
West Point Road.
Exactly. So it's not that you have to be some wizard, right? You just have to look and pay attention to your swing highs and your swing lows. Once you understand which swing highs and which swing lows will invalidate your trade, then you know what direction to take that price, because it's either going to respect that high or respect that low. It's either or. It's not going to do both. It's going to respect one or the other. And once it breaks one of them, then you understand, okay, I can take the trade the other direction once it pulls back. Does that make sense?
And
Yes,
it's by the wick. Go
Yeah.
ahead. Go ahead.
No, I was just saying, for me, I sometimes I know, like, okay, if it breaks a certain high on that time frame, then it can pull back on that time frame. But then I do sometimes get confused when I switch time frames. Like, okay, wait a minute, like, is this only for the 1 hour time? Is this only valid for the 1 hour time frame until it breaks the 4 hour?
Yeah,
On the
it's not just you, but that's exactly why I just did what I did. So you see exactly which swing high and which swing low I gave you, right?
Yeah.
Now, obviously, if you want to trade a lower time frame, if you want to trade the 5 minute, the 15 minute, right? Then the 15-minute swing high or the 1 hour swing high becomes important if you're trading down there. But I'm not talking about that because I'll just lose everybody. You understand what I'm saying?
I'm talking about 4 hour on a higher time frame.
Well, okay, so we just talked about the higher time. You can use that 4 hour swing high, 4 hour swing low for your targets or for your signals. If you want to trade lower, then you can use the 1 hour, right? But if you're trading down there, you should already know this.
Well, you're bringing it to the forefront, and I think it's great. It's great, but people say they know this and they don't.
They don't.
Like, yeah, like it shows in the results. So understanding that wick, it has to break. If it doesn't break, it's telling you very clearly that it's going the other way. And when it breaks the wick by an inch, it's telling you the way it wants to go.
Exactly.
Now, you still have to, if you don't believe that, like you kind of believe it, so you have your finger on it for a minute, and then as soon as you don't believe that that's a break, you have just now let your finger off the post. You do not want to take your finger off because you're putting all this work in.
Yeah, so my question more so is like on the 1 hour, if I'm trading on the 1 hour and you saw the break on the 1 hour, don't you still have to wait to see the break on the 4 hour to trade the 4 hour in that direction?
PT. Here's the problem I have with your line of question. You just told me you get confused on the 1 hour, but now you're asking if you're trading.
No, I'm not saying I get confused on the 1 hour. I'm saying my confusion comes if I'm taking a trade on the 1 hour, you know how.
But you shouldn't be taking a trade on the 1 hour. If you don't see it, if you don't understand it. Am I making?
Yeah.
No, okay, I understand my question, but it's okay.
Let's talk. I want to get your question straight.
Well, because I'm multitasking too, so it's kind of hard for me to try to explain what I'm saying.
Are you trying to say like executing on the 1 hour but trading on the 4 hour? I mean, that's kind of like the way I'm understanding your question.
Well, I'm saying, like, if I'm taking a trade on the 1 hour, my 1 hour, I'm trading off the 1 hour structure, right? And I'm not talking about my entry. My entry could be on the 15-minute if I'm taking a trade off the 1 hour. My question is, if I'm done with that 1 hour trade, if I'm still looking for this trade to continue in a bullish direction, don't I need to wait until I get the 4 hour break in order to trade that 4-hour structure, because it might break on the 1 hour and I might be good with that trade, but shouldn't I not just expect it to break on a 4-hour? Don't I still have to wait for those confirmations in order to trade the 4-hour?
Yeah, you do have to wait on the 4 hour. However, in these particular trades, right? What I was explaining in this particular trade is us expecting the trade to go one way, right? Based on the 4 hour swing high and swing low, not the 1 hour. Now, the only reason I went to the 1 hour is because the 1 hour has structure too, right? I'm showing, we're talking about a trade that we're taking based on the 4 hour, right? Based on that 2 week chart, the 2 week order block.
Yeah.
So I don't want you to get anything confused about 1 hour, right? The only reason I went to the 1 hour is so we can look at structure on this break right here, when it broke right here, to let us know when we could get out.
I totally understand when you're going down the time frame because you have confirmation on the higher time frame. I'm talking about going up on the time frame. So I'm sorry if I confused anybody, but yeah, I understand this direction because if you're talking about a time frame of 4 hour and then you're going down to the 1 hour, yes, then yeah, because your structure is based off of the 4 hour structure. So of course you can go down. If you see that break on the 1 hour, then you can follow it to the 4 hour TP because you're taking your frame from the 4 hour.
Right. So if you're trading on the 1 hour, who trades on the 1 hour? Who in here trades on the 1 hour time frame?
Sometimes I do.
So I have a problem with you doing it, TT, because you're not clear on it. And
Clear what?
On the structure. That's what you're telling me, right?
No, I'm trying to say that if I'm trading from a 1 hour, if like as an intraday trader, if you're talking about the right now money on the 1 hour, all I was just trying to say was I think that I need to wait. I mean, this is slightly different from you're talking about the opposite direction or the opposite time frame going down. I'm talking about the time frame going upward. Just like I wanted to be sure that I needed to wait until the actual 4 hour break. Like for UJ, for example,
Let's go
like
to you, Jay. Wait, let's go to you,
wait.
Jay.
From what I just heard, I think you have to wait on the 4 hour, but the break is going to happen before the 4 hour. The 4 hour is going to be late. That's why you're going down to the 1 hour so that you can get the change of character early.
Exactly.
Because if you wait for the
Exactly,
4
that's
hour,
what I
if you wait
understood
for the
too.
4 hour break, then you're waiting for like 12 hours or 24 hours.
Mm-hmm.
That and the whole thing, if you're trading on the 1 hour, only thing you give a crap about the 4 hour is what structure. Like, is it bearish or bullish? Because if the 4 hour is bearish and you're bullish on the 1 hour, eventually that 4 hour is going to take over.
Okay.
But if the 4 hour is bullish and you're trading bullish, then I mean you got a long time you can trade that direction. Again,
But if you don't know it's going in that direction yet,
well, why
if I don't know if it's going in that direction yet, I can't just assume.
Well, you can't, but that's where your structure. This same concept comes into play.
It goes back to the time frames, and people are saying, "Oh, well, I think this is a break, and I don't think this is a break." It's either a break or not a break. Until you agree to that, then you're going to be confused. You got to know where that break is, and you always have to know where the break is. And when you move through the time frames, you're going to see more of it. And you have to know that those wicks, even if it's a wick and it's breaking, that is a break.
I understand that a wick is a break. But yeah, I just the time frame going upward is just sometimes I get lost in the upward time frame. Cause I
Yeah,
think
because it's
that
delayed.
well, cause I know we always say take TP at TP1, which is the 0, which is the equal level,
Right.
because we don't know if it's gonna break or not. So we don't automatically know if it's gonna break until it breaks on that time frame. So it's kind of like you gotta stick to that time frame that you're trading on, not go back and forth.
You got to be able to juggle. And when you start seeing the result of this, because you're not fully clear on it, you're getting there. Once you're fully clear on this, everything's going to change for you, because now you're going to trust it. You're almost there. Don't worry about it then.
Okay, you guys go ahead.
You had a question, Leandra?
Yeah, I was just gonna say that you could tell from last week this was going to sell, just continue to sell instead of pulling back, because on the weekly time frame on GN, it created a doji, and so obviously it's a continuation of a sell. It didn't create an order block until the 2 week, and then on the 4 hour, it created an imbalance, and if you put a gang box on the imbalance, it pulled back to the 50%.
And push down.
Because it didn't, and it continued to push down because it didn't create an order block on a higher time frame like the weekly. When I saw that and it didn't pull back by Tuesday, I was like, it's just going to continue to sell. That was my confidence that it wasn't even going to buy. It was just going to continue to sell. So,
right.
Unless it broke that 50% of that gang box where it created that wick, and it didn't go in, it kind of tapped into the golden zone, but didn't. Like, it's a couple of pips off. Maybe my fib is like a bit off on that weekly fib that I've fibbed it on, but yeah, that's my confidence that price is not coming back to that gap anytime soon. And it was going to continue to sell. From what I saw on GN the previous weeks, how it likes to leave gaps and like just continue. So that's what I've noticed about that pair. Yeah, that was my confidence. That's why, and that you're saying that high to be broken, I would say the high above, if it broke that 50%, that when it wicked up into that 50% on the 4 hour, if it broke that high, that will be my confidence that, okay, then I would sell from that fair value gap because it's got an order block above there, but it didn't.
Yeah, there's like, I guess it's a few different ways that you can look at it. But I'm giving you a surefire way to look and understand what's going on. And these are not hard, it's kind of all you have to do is look at your chart. So I want to go back to this UJ trade because I want to say on Tuesday, on Tuesday we talked about this trade, and we talked about this trade turning around when it hit this spot, right? News came out. If y'all remember PPI, whatever. It was good news, but price pushed up, did not violate this order block, and it bounced. And it sold from here. Many of us caught a sell from here, right? And basically you could have sold it down to this 4 hour low right here, right? So price pushed up, it gave you this pullback right here. And then you got this bullish order block. So when I took this sell, price eventually came down to this low, but it did not break this swing low. right? This is why I sent you that message, TT. Price pushed back up. It didn't break the high. It pushed back down. It didn't break the swing low. Profit take for me. You know what I'm saying? Because it's not breaking this low. It's a problem for me. So that's why I sent the text or that note in that chat to say, hey man, where are you with your trade? And you said you were still in it. So I told you
your information is on the right.
If price broke that high, you need to close out because it's going to buy. And eventually,
Okay, when you, I'm sorry.
go ahead.
When you said, okay, you noticed it didn't break, you know what my problem is? I'm thinking like, I don't know when to make that decision because the next candle could break it, or you know what I'm saying? I don't know.
This is what I'm telling you right now. I could have not taken profit, right? So maybe I took profit and then this next candle breaks, right? Then I don't get paid on that move. There was a move that happened the other day I showed you where on that EJ move, I got out of the trade and then it pushed up. You're going to win some, you're going to lose some. But you have to be okay with whatever your results are. I got into this trade right here at this inbound. This is where my sell position was. So 70 pips, I'm taking that. I was in profit 70 pips. Then I was basically break even, you know. Then I'm in profit 70 pips. I'm taking it because in my experience, if price is going to break here, it's going to break. The news was good for the dollar. And it still pushed off. So you have to look at it, in my opinion, you have to look at this in multiple ways, right? Right here was your imbalance. Your imbalance got closed with this wick. So this right here, retesting the zone, all this is just saying is I can't break through this zone right here. And in my experience, when price does that, you know, it's not a good thing. So I'm getting out of the trade. I'd rather close with my 70 pips than lose a trade that I was already up 70 pips in.
It was playing too many games.
Yeah, it's either going to make the move or it's not. Now, if you have your hedge or whatever, your stop loss is up here, then no, you don't have to close the trade. I still think this trade is going to pull back down to this area at least. You know, if I look at the weekly for this week, price wick this high right here. Right? If I pull up the daily, because all you see is wicks, we had a pretty solid move up here. So maybe price just pulls back to this first area. Maybe it pulls back to this daily level and goes higher, right? But I think the price could pull back basically to this level. It could wick these equal lows right here before it goes back up.
Like that's high hopes for you, Jay. You know, he don't like to do none of that.
Well, you're right, but again, I don't have to trade it. All I'm just trying to make an assessment of what I see. I see a huge imbalance right here. You see the imbalance from here to here. So price could pull back into that imbalance, respect that order block, and keep pushing. Easy money. It could come down here, finally take the liquidity from down here. This is the exact area that it didn't break before. It could come and take that liquidity before going higher. If UJ is going to go higher, it's probably going to need a little gas, but maybe it trades down, right? Maybe it trades down to sucker the sellers in. And then maybe Powell says, I'm raising the interest rates again, which nobody thinks he's going to do. So maybe that way it takes up. But you just have to understand where your liquidity points are, right? Here's a low right here that's marked up. That's a swing low for on the 4-hour. You see it?
Mm-hmm.
Then you have this, well, this is a low too on this candle. Then you have this area of all these relative equal lows down here. So
You don't need gas though. It's electric vehicle. So just take what need taking to keep rolling up.
all righty then. But I mean, maybe you know, however you want to look at it, but you, as long as you know where your liquidity is on the chart, then you're going to be in a better position.
I think
I'm
it's gonna
never-
tap right into them MAs, right
well,
into that
listen,
order block and
that's
push up.
liquidity. Well, you see, that's liquidity. That's cool. But
Yeah.
I'll tell you what, I'm never buying right here. I'm not buying right here.
Right. Never buy at the top.
Yeah. So if it comes down here, that's cool. You can buy right there. If it comes down further, that's cool. You can buy right here. I'm not buying here. I'm not buying here in the middle. I'm buying at these spots. And if you trade like that, TT, if you trade like that, it's why I won this trade. I sold from here. While you were buying, I told you, I said, I'm selling right here. In the face of the news, bam, take me into profit immediately. It's just because you understand where your liquidity is, where the trade is going to stop it. It's going to fill that gap, and it's going to push down. Now, if it doesn't break the low, then that tells me that, man, we're going higher. It's either going to break the low or it's going to break the high. So I'm cool with that. But when I went from here to here, my target is this low right here. It didn't break. You know what I'm saying? It comes back up. It doesn't break. Oh, I got to get the hell out because, even though it gave me a third, I'm not hanging around. You can't break the price. I got the roll. Right? So that's cool.
I see.
And sometimes it's going to cost you money, but that money is not really your money. It's money that you could have had if you would agree with the trade or whatever. I think maybe right here was a trade that I missed. I think I bought it up, and maybe I don't remember what day that was, but we talked about it on that call Tuesday. Maybe it was here. I don't know. But it does cost you money whenever it doesn't, whenever you think something or you get scared and you don't sit in the trade and it keeps going up. But that's fine. I don't mind missing out on money I never had. But what I don't want to do is give back money that I already see.
Yeah.
And I'm not just doing it just because, I'm doing it at a key level, at a high or a low. You guys have any questions? No questions. Okay, that's cool. Samantha, what pair are you talking about? EJ. EJ, I just showed this trade because I just showed EJ chart because I was, oh, UJ. Yeah, let's talk about UJ because I can talk intelligently about the UJ. So my UJ short, I'm just going to trash all this. My UJ short was here. This is the low that I wanted on this UJ short. Now, if you remember Wednesday morning, there was a, let's go to the hour chart, because there was a news event, PPI news, right? So price was pulling up, the news hit, and it put me into the trade. My target is this low, but this is my immediate, this is where my attention is, right? Because this is the 4-hour pullback right here. This is that 4-hour pullback. I'm only on the hour chart, so y'all can see it. What I want to see immediately is for this trade to come down, break these lows, right? This low and this low are crucial. I need to see these two lows broke. I don't care if it retraces after that, but I need to see these lows taken out, because that tells me as a trader that we're pushing lower. If it never breaks these lows, then we can't get down to these lows. You can see this clearly on the 1 hour, right? Everybody can see that, right? Even though my trade is not based on the 1 hour, my landmarks are very clear. So let's play it out. Trade comes down, makes equal lows right here, plays with my emotions. Goes back up. I'm saying, hey, as long as we respect this right here, I'm good. We didn't respect it, right? So now I'm saying, if this trade pulls back to this level, I'm getting the hell out, right? Trade pushes back down. This trade pushes back down, I'm out. Now the trade goes higher. If we had respected this imbalance, right? And let me replay it again, or let me move the replay button back. How do I get, okay. Let me delete this so you can see it clearly. What's so important about this imbalance? What's so important about the trade respecting this right here?
Then it would have made like lower high or what? I guess.
So the concept says when it pushes down and it breaks these lows, right? Price needs to trade back up into the imbalance. Think
Yes,
about the video 3 of what ICT is saying. Trade into this imbalance, right? What he's saying is take your short right here at the beginning of that imbalance, put your stop above the high. Think about that video. Target the equilibrium, right? Yeah, y'all think about video 3. Y'all remember video 3?
Yeah,
Yeah.
yeah.
Y'all don't. So y'all understand the concept here, right?
The power of three.
But no, it's not the power of 3. It's the ICT mentorship 2022, where he's showing you how to take the trade.
Right onto Adair Road, then turn
Talking
left
about
onto Gilroy Road.
entering at the bottom of the imbalance.
Yes. Who y'all do y'all? Okay. All right, I got something better. I'm just gonna play it. It'll take
Put the
5
link
minutes.
in the chat. I put the link in the chat.
No, it'll take 5 minutes. We're gonna watch it right here.
I put the link in the chat. Go ahead.
Oh, did you?
You're doing a crossover move like that.
I thought he was only saying to enter in that episode, like enter in the imbalance after a stop run.
Well, let's look at it. What was that a liquidity?
Usually it's after it sweeps liquidity.
Okay, so when this went up, it didn't take liquidity?
Yes, it did.
I mean, I
Did,
did.
but-
It didn't do that?
Yes, but it wasn't.
did,
It
but
didn't, it didn't push
that could
down to
just be
break this
higher
low?
high.
Hold on, y'all.
Yes,
It didn't break this low?
yes.
So yeah, this is the exact setup.
That's true. It's kind of just ugly.
Well, I mean, if we're on a 15-minute chart, I guarantee you're not going to see anything different.
This
That's
is the same argument, bro. This is the same time. Every time you ask that question, you got 50% of the people say, no, it didn't. And you got 50% of the people say, yes, it did. That has to be an agreement. You got to it's either a break or not.
Exactly.
It's up to you. You can accept it or not.
Can y'all see the ICT video on my screen?
No, we can
No.
see the chart, but just looking at the UJ, price took liquidity because it filled that gap in price for
Yeah.
the day. If you go to another chart, that's a actual gap in price. Let me just put it up on my chart. It's a gap in price which it filled with that news candle. So that back and forth candle that Todd's saying. Todd, go back to the chart, please.
And there's a difference between filling the liquidity and running liquidity. It gets ran through. That's different.
Yeah. What time frame was you on? Hour.
This is the hour.
Yeah, I'm looking on my chart. Yeah, so if you go to an 8 cap chart, I'm not saying Todd go to an 8 cap chart, but if you go to an 8 cap chart, or if you look on your MT4, MT5, there is a blatant gap in price, which is 52, 51 pips. And it's got a bearish order block above there, which is created. So that candle with the double wick on each side is a news candle, because I saw that go up and I saw it go down. So that filled that gap. So after the gap's been filled, now we're waiting to see what price is going to do next. Is it gonna, now it's taken that gap out, is it gonna rally higher or lower? And Todd's gone down to the 1 hour and showed you how to do an ICT 2022 setup. But yeah, that's, you've got to know that that's an actual physical gap in price. It's not just an imbalance or a fair value gap. That is a physical gap in price that's been taken.
And not that, none of that should even matter to you. You should know how to see this on a chart. It doesn't matter what any other chart shows you. On this chart, you see this monster imbalance. You see it. You understand the concept, which says it's going to fill, and you can take a short. You see it. So with the concept, yeah, I'm not making the concept up, dude. Like, this is ICT's concept, that all I'm doing is trading this. I took my trade here. I targeted these lows, right? But in order to get to these lows, remember what we talked about. Let me go back to the 1 hour so we can see it clearly. Before we get to these lows, we have to break these lows. So I'm in the trade. I'm in profit. It pulls back, which is cool. It pushes down further, which is cool. Now it's pulling back again. I'm not nervous, right? Actually, I got out of the trade. I got out of the trade because this was the second push down. So if it respects this area here, I can take the sell and push down again. The significance of this area is what? The imbalance, right?
Yes, yes.
If it breaks this, if it goes through this imbalance and breaks this high, the validity of a sell is over. It's not respected because it shouldn't break these highs. Price should be breaking the lows down here, not the highs. It's either going to break one or the other. So when you look at this trade setup, right, and it breaks that high, then it pushes down, you should be getting in a buy down here because it broke the high telling you, hey, I'm going higher. It pulled back. Now it's pushing higher. Does that make sense?
Yes.
Yes.
Now, I said it, but I don't want you to listen to me say it. We can go to the source.
And it's broken to the downside. Link I sent out the other day. And I wanted you to go through this particular chart and look for reasons that provided the market structure shift and the buy side and sell side liquidity. So if you have not done that, please stop the video and do that now. Otherwise, you're cheating yourself of learning opportunity. All right, so here is that chart. Again, 15-minute time frame on the E-mini NASDAQ 100 futures contract for March delivery 2022. And take your attention over here. Okay, this old low and these relative equal highs. See that? Old low, below that is sell stops. And relative equal highs, above that is buy stops. Now, you could have used this high here. There's nothing inherently wrong about that. But whenever I see equal highs like this, and if it's higher than an old high over here, I'm going to use that. So that way there's a little bit of insight for you for your study journal. The sell side liquidity, you can see that the market trades down, hits that, runs through it, then rallies all the way back up, clearing the equal highs. So the buy stops have been taken here. Okay, so at both of these price points here and here, that's the, I guess, the point at which you'll look for or anticipate a market structure shift. And you don't force it. Okay, I see a lot of people try to teach my concepts. It'll talk about market structure breaks or shifts, and we'll use that term interchangeably. But for intraday, I want you to think about intraday market structure shifts, because it's not necessarily a break in market structure that leads to prolonged multi-day movement. Okay, what do I mean by that? If you see market structure that's bearish and it's broken to the downside intraday, that may just lead to an intraday price leg that may eventually see that high be taken out in the same day. So that's why I'm using the term market structure shift, not market structure break. For our conversation here on this mentorship, just know that when I'm going to lean on that term market structure break, it means a little bit more in context versus an intraday shift in market structure. It just means that there's likely a downside draw or an upside draw intraday by saying the term shift. Okay, so there's a little bit of semantics there. All right, so we have both of these areas here and here where there would be a likelihood of a market structure shift. Up here, we'd look for a fake run above here. So that fake run above, how do we know it's going to be a market structure shift that's bearish? I get that question a lot, even from mentorship students. What you're looking for is the evidence I'm going to show you here tonight, okay? Forget everything else everybody else says about market structure breaks and shifts and all that stuff. This is it, okay? This is the brass tacks. There's absolutely nothing else that you need to know about it. I promise you. If they add anything to it, it's just because they want to sound and look different. But this is the algorithmic perspective of a market structure shift intraday. Now, keep this price level in mind. So it's essentially 14,600 and 14,820. We're just eyeballing it, okay? Now, dropping all the way down into a 2-minute chart, this is that same particular day. Here's those relative equal highs. And this run down here, okay? If you recall, 14.6 and around that 14.860 or so, okay? If you look at this market structure, without having the levels on your chart, it's easy to get lost in all of the quote unquote noise, the uninitiated. And I know it's going to razz the people that don't care to really learn here. But the uninitiated folks that will watch a video or listen to some of the lectures I'll put out, they're trying to bring something in. They're trying to bring in their preconceived notions and ideas about what they think they understand about markets or technical analysis or something in price action. And I want to kind of like allow you to just put that aside for a moment and just imagine this chart is the first time you looked at price action for the first time. And that's hard, but kind of like strip away everything else that you want to bring to the conversation. No order block discussion, no breaker, none of that stuff, okay? Supply and demand, Elliott wave, all that garbage. If you look at this price action here, when we had this low form, right before this low was formed, there's a swing high right there. Now, in the first mentorship video I gave you, I mentioned that the high frequency trading algorithms will use market structure on a 3-minute, 2-minute, and 1-minute chart, many times sub 1 minute. That would be like 45-second, 30-second, 15-second intervals, okay? What the algorithms are actually doing, and this is also going to correct a lot of people out there because they put out misinformation. It's so nonsensical, but I'm challenging you to go into your charts and see if this is not what's actually going on, because it happens every day. If high frequency algorithms are operating every single day, then these signatures will be in the chart, okay? If you look at this short-term high here, right before this low formed, when this high is taken out right there on that candle, that's significant. Only if this run down here has traded into sell stops, okay, below an old low of some kind. It could be a double bottom, it could be a single low, okay, but it's got to be trading under some retail idea that would be viewed as support. Up here, the same thing. We're trading above highs, so we know that above old highs, a neophyte's perspective will be, these are unknown orders, so therefore that's a flawed perspective on price action. How do you know there's liquidity up there? How do you know there's buy stops up there? It's this logic. It's simple. Look at the chart. Everybody's trying to do something based on some kind of theory, logic, whatever, some system. There's buyers and sellers coming in at all times. Their buying and selling quote unquote strength or pressure has absolutely no bearing on where these prices are going to go. I know that may shake individuals that think they know something about the markets. Oh, I have an uncle that used to be on the floor of the Chicago Board of Trade and blah, blah, blah. The Mercantile Exchange guys say this. I don't care. Okay. I don't care what any of those folks say because they didn't design the algorithm. So again, put all those talking points and everybody else's opinion you've adopted because you probably heard someone else talk about it and you subscribe to the review because it's easier just to do that instead of going and looking at it for yourself. And that's what I'm asking you to do. I'm telling you, this is my personal belief. You're going to see proof of these things in a live account execution. But I want you to see the logic behind it, because if you can see this, you'll be light years ahead of everyone else. And you'll laugh in the face of all these people that are going to tell you you're wasting your time trying to learn this. I promise you, this lesson is going to change a lot for you. When this run above these relative equal highs happens right there, you're anticipating a market structure shift. You're not forcing it. You're not trying to get ahead of it, okay? I don't think any of you are going to have the skill set to do that. There are ways to know when to sell short right above that and not even wait for the shift in market structure. Just like there's ways to know to be a buyer down here without seeing that short-term high broken, then looking for a buy. Over here, the opposite. See this swing low? Let me go back to this for a second. We have this high on this candle, then we have the candle right after that here, the highest one, and then the lower high of this candle here. So that's a swing high. Very simple little pattern, but it means a lot when it's in the proper context. When this high is broken with this particular candle right there, that is significant only on the basis that we have taken liquidity out of the marketplace. That's it. So when it broke this short-term high, this is more meaningful. And then the market will start to seek buy stops, okay, or buy side liquidity. That would rest above here, here, and here. Now, I shared an example of live executions, and I was teaching on the idea of utilizing micros, which are essentially $2 per handle, okay? So, or 50 cents per tick. This chart is NASDAQ E-mini. This would represent $20 per handle. And there's 4 ticks in each handle. There's your $20 per handle. Okay, so again, what that means is 14,680 to 14,681. That's one handle or 4 ticks. There are some that will doubt the idea that you can trade all these little internal swings. Okay, and I'm going to give you some insights on how I was doing it. Okay, the main context of this lesson is for you to go in to your charts and try to prove me wrong. Okay, that's the challenge here. That's your homework. I want you to learn what I'm doing in this lesson here. And then you go into your charts back testing, and I'll show you what that looks like. What does it mean to be back testing, and what you're looking for, and how you're going to screen capture, all those things. But your mission is to go into the charts and look for this not being true. Okay, this is exactly what I did on baby pips back in 2010. I told everybody, do not take my word for it. Don't take my word for it. Go into the charts and see if this is true or not. I believe it, but I don't want to try to convince you, because I won't. You'll convince yourself once you start seeing it. It's over. There's no argument after that. Okay, but it's simple logic. Very simple. This is a very clean chart, is it not? All I'm going to do is add a few annotations, and this is about as extensive of lipstick we put on our chart. I know it's shocking, right? Can you still see the candles? Because it might be a little obstructive. I'm being facetious. You see these guys out there with these charts that have graffiti all over it. You can't even see the price candle. Nothing. You can't even see any of it. But there's all kinds of overlays of all kinds of nonsense, which means absolutely nothing, because algorithms could care less about any of that stuff. Triangles, harmonic this, crabs. It's crazy. I know. But hey, everybody's got to have a religion. So here's those sell stops. So this little area here, it's shaded in. That's a area where sell stops would be residing below that 14,600 level, okay, on that 15-minute time frame. So the market dove into that liquidity, and you may or may not know that is a buy. You don't need to. You anticipate a shift in market structure. When the market rallies above, when does that happen? On this candle right here. See that little light bulb? That's when you're thinking, okay, now I have a condition in the marketplace that I might see an opportunity intraday. Let's see if there's further evidence to that. Short-term high is taken here. We traded above it. It does not need to close above that. Okay, real important. Once that candle closes and this candle opens, you're going to monitor this candle. And you want to see, as soon as this candle closes, does it create that fair value gap? If it creates a fair value gap, again, that's a candle with a high, one single pass up. Next candle has a low that doesn't completely overlap all this. That's a fair value gap, real simple, okay? This candle is where you would look to potentially trade at the earliest, because now there's a gap there. The market trades down into that, boom, takes off. Here is insight that everybody needs to understand because they're out here running around on YouTube trying to teach order block theory. Order blocks. Okay, I invented it. It's mine.
It's mine.
No one talked about it before me. And I first mentioned it in 2010 on baby pips. Prior to that, 1996, I was only teaching it to people one-on-one in teachings. That's it. Okay, you can't find it in books prior to that. It's mine. No one else taught it before me. It is mine. So I'm going to correct all of you today so that way you can teach your people correctly and not hurt them. See these down closed candles? See that? That's all one continuous order block. What's it doing? It's inside that pool of liquidity, sell stops. Where's the open on that series of down closed candles? Right here. That's the price level extended out in time. Boom. So inside this fair value gap, this opening price on the order block, that's your buy plus 3 pips or whatever for spread. And that's what you would use for a limit order. That's pretty neat, isn't it? Well, price starts to run where? Above the highs where buy stops would be here, above this high here, and above this high here. Now go back and look at the example where this particular day here, I put in orders and I was still learning how to use the Thinkorswim platform. And there's a little toggle box where if you toggle it, it'll send your order right to the marketplace. It won't let you review it. And I had put that on to see if it was going to show me any kind of information on the screen, but it didn't take it off. So what happened was I put that on, and it was actually an order that I mistakenly had in. So I was hoping to see if it could give me an opportunity to get out of it and cover with next to nothing, or maybe even squeak out a profit. It wasn't having it. So I had to reverse and then go back and go short, wrote it down, and then you'll see me covering in here and then going long, selling short, reversing, going short, buying long in here inside the order block, rallied up, sold the long, reversed it, bought it here, got out over here and resold for that big run into that. Okay, that's what I was doing. There's people out there who are going to tell you he doesn't trade that way. These people don't know how I'm trading. You have no idea how I'm trading. None of you do. Okay, I'm teaching you, obviously for those individuals that are outside my paid mentorship, which is not open. So please stop emailing and asking. People are still sending me emails. Can I join? No, you can't join. Be content with this. I'm teaching you gold, and it's costing you nothing but the time to sit down here. And if it doesn't work, you're going to know right away. Okay, I'm not wasting your time. I'm going right into the brass tacks. That way, the people that are weak-minded will know right away this is it or it's not. That way, you'll know this is too much work for you. And that's fine. Go and do whatever you got to do, and I wish you good luck. But the individuals that really put the time in and test what I'm challenging you to look for, you're going to see it's there, and it repeats like clockwork. Okay, it's real important you have that mindset. So the buy stops above here that was taken, this swing low forms once this candle closes. So this candle we're watching, does it go below that short-term low? It does. So now we have a shift in market structure that is now bearish, only because we've taken buy stops. Okay. Fair value gap forms, market rallies up into that, you go short there. What are you looking for? Below here, sell stops. Below here, sell stops. Below here, sell stops, and in this fair value gap here. So if you are in a position that has multiple contracts, or say you have a forex trade, because this works in forex too. It's not just limited to futures. Again, I'm just using this asset class because I cut my teeth on these markets. When everybody else was still in elementary school that's trying to teach today, I was trading the S&P. Okay, I probably sound like a young guy, but I'm actually getting ready to turn 50. So I've been around for a long time, 30 years, this November 5th, 30 years, that's 3 decades. And the things I'm teaching you, I'm not teaching you one trick pony insight. These things work on all asset classes. Now, I'm not going to co-sign the crypto markets because that only my students are reporting that this stuff works there. I don't even mess around with it that much to know, okay? But you can take partials below here. I really wouldn't do it there, but below here, here, and then some of you saying, well, why wouldn't you take them below their ICT? Well, if you're trying to get short here, that's not really that much movement. So if you're going to take something off your trade below that low, why not just try to reach for that one? and you could get it there, right here. Okay, and then below that low is nice as well. Below this low, and this is what I mentioned on the first lesson. Okay, elements to a trade setup. This is below the 50 level of this high and that low. Okay, so 50% level, that's what we're targeting. Now, this candle's low was the high end or first objective inside this gap. So that's your target. You're going to look for that. So you're looking for low-hanging fruit, the easiest target to get to. You're not trying to be perfect. And you grow into eventually holding to see if it will fill in that gap. Okay, this fair value gap. In other words, going down to this candle's high.
Sweet baby Jesus. That sounds just like what I said. All righty. Order blocks are mine, folks. I envision them. All right, let's go back and talk about this trade, folks. Who doesn't understand the setup now? After looking at what ICT said. Bueller. This was the imbalance that we were trading back into to take the short. Which is why my position was here. This is a news candle. It took out these highs. The same exact setup that ICT had on its 15-minute chart is right here. These are the equal highs that price takes out, right? When price comes back, we're going to break this level of lows. We'll break this level of lows right here. It's the same stuff. The next level of lows we're looking to break are here. And now remember, this is the 4-hour low. Trade pickup, I'm in profit. The pullback, the second time, is there. I'm out. We're not breaking these lows. That's a problem. Now, I know this is just going back up, supposedly to mitigate this level. That's cool. If it does mitigate this level and it gives me a bearish break, I can get back in for the sell. If not, and it breaks this high, it's time to get out of the trade idea because it's not holding up. Now, notice that, notice that what ICT was saying was the market shift was based off of this being an intraday setup. What he did not say, or maybe he said it without saying it, is whenever you're marking your swing positions on a 15-minute chart, those highs and lows are intraday breaks. If you're setting your swing positions off of 4-hour swing highs and 4-hour swing lows, then that trade will carry you into multiple days, right? The 15-minute time frame, you can get a break in a run of that in one day or a half a day or whatever. The 4 hours, though, if you get a 4-hour break, that pullback might carry you through that session. And then the next session might be a consolidation. And then the London session might be a push in the direction that we broke. So you're going to have multiple days of the trade going that direction. That's why his is a market shift on the 15-minute and ours is a structured break on the 4-hour. But it's it's the same concept, right? When these lows are broken and prices pushing down, you're happy. Whenever the lows stop being broken, then you have to raise your eyebrow. Yeah, this is a trade up. You can trade that up. You can trade this back up into this area. But if I'm you and I trade this back up into this area, you can't be 100% sure that this price is just going to keep breaking. You have to wait. This is why he said you can anticipate the move, but you can't expect this will happen. No, you can anticipate that, hey man, I know the price is going to fill this imbalance. But if it runs this high, then the market has other plans. Are there any questions?
Yes. I'm not sure if I got what you just said. What's the difference between the market shift and the market break on the 15 and the 4 hour, please?
So what he's saying, a market structure shift is a break-in structure that might not necessarily carry on for days, right? It's
a short term.
It's a short-term move in the market.
Okay. Okay, I got it. Thank you.
Okay, so there's everybody understand what the clues were for the trade setup. And listen, you might not be here as a trader. That's cool. You know, it takes time. But if you're not there as a trader, the question I have for you is why the hell are you taking trades off this time frame if you can't read the structure or if you don't understand the structure on that time frame? What you have to do is move up in time frames and trade the higher level structures. And it's the same concept. It just takes longer for that trade to play out. If you're not a intraday trader, stay your behind off the 15-minute chart unless you're going to the 15-minute chart to find an entry based on your 4-hour structure. Hey, Todd, I got a 4-hour bearish order block. I got to wait for price to pull back into my 15 or my 4-hour order block, and I can drop down to the 15-minute. And when I get to the 15-minute, I need to see a change of character, and then I'll take the trade. I got it. If you're doing that, then you know I understand what you're doing. But if you're just down here, you know, I don't know, playing music and doing whatever, trying to take trades from here and not understanding what you need to look for, right? You're not understanding that when you take this sell, that your key is this level being broken and it never gets broken, but you still hanging out. Something is wrong. So you have to kind of understand what you're looking for. And it's in this scenario, the reason why I have these moving averages on my chart and the reason why I have you know, things to help guide on my chart is because when you work with people who don't have you know, a higher level of understanding of how price is moving, you have to be able to break it down in layman's terms, right? And they have to understand that, hey man, once this high is broken, that's the market telling me we're going higher, right? When it breaks the high, you expect the pullback, and then you want to see the market continue higher. But if on this pullback, you go down and you start breaking structure to the bottom side, like this low, and this low, then you know that this whole move is called a change of character on a higher time frame. That's what that is. This move pulled down, we broke this low. It immediately came and broke this high. On a higher time frame, you have a change of character, right? Maybe that's not the day. Let's look at the week. This week went down. We broke the low. Basically, you took out the liquidity, right? We grabbed the liquidity. and we broke the high, telling me that the market is going higher. It's a change of character. It's the same stuff that you would look at on any other level of chart. Any questions? Hey, everybody got it. Everybody got it. All righty then. Who wants to break the pair down for this week? Bueller, anyone, Bueller. What pair are y'all trading this week?
I was looking at EA and GA.
So you want to break it down for us? That'd be great there, Elfie.
Maybe somebody else who never did it.
Well, who wants to do it? We don't have to do it.
Okay. Can you see my screen?
Mm-hmm.
Okay, hold on. Wait. What did I say? GA. Yes, GA gave a nice bearish order block. So it's been bullish. It looks like it's about to, or it has started to pull back. For this weekly order block, I am going to fib the weekly candle. And mark my levels. So 50. There's no 78. And I go down to the lower time frame. Let me move my fib. So, no, let me put it back, my bad. On the 4 hour, is it the 4 hour? Let's see. So this imbalance already looks like it's been mitigated. The imbalance that is at the 78. But there's still some left. So I want to see it buy up to then sell down.
Are you going to mark your charts? Or you just, do you
Hold
just,
on. So That's not an imbalance. So wait, what do you want me to, what? I'm lost.
Is this how you mark your charts?
No. So here's my 78, right? I see equal, relative equal highs. I also see an imbalance right here, which it also could just dip into. But ideally, wait. For a short, I would want to see it. I would cover this high right here. In order to sell it down. Agree, disagree, questions.
What is your sell target?
This low right here.
Okay, what low is that? Just the next one?
Mm-hmm.
What if it just goes to that, closes that imbalance?
To this imbalance right here,
Yep.
the top of it, which would be this low. I
No,
doubt.
close it, like to close the bottom of that imbalance, not the top of it.
Right here.
Yep. You can leave it there, but I'm asking you, how do you know? Okay, did you look at the monthly?
I'm looking at the monthly now.
Okay, so where was your target?
Based on the monthly?
Yeah. On your, did you mark it on your chart? So you're selling this down to somewhere, and I'm asking you, where are you selling it to based on your chart? So on the monthly, you're in a bullish order block, right?
Yes, and this one right here.
So but you're selling this. So where are you selling it to?
Okay, so if I would take it actually from the monthly, I suppose I should have fib this move right here.
I'm asking, so this
To
is,
the gap.
Where's the gap? This one?
Yes, I believe.
so y'all think that this is just gonna sell right down there to that gap?
Not immediately though.
Mm-hmm.
So my question is, where are you taking this sell trade that you're setting up for us? Where are you selling it to?
I would sell it into the order block, into this order block. Maybe even to this low, max.
Okay, but so where is your target on? That's what I'm asking. Where's your target? Can you see your target?
On the monthly, I don't see a target.
Okay, so drop back to the weekly and show me where your target is.
This was my target, which was the 4-hour imbalance. Okay.
Put your line on. Okay, yeah, that's what I want to see. Where is your line, and how does that marry up with what's going on the higher time frame?
Okay, can you pose your question different, please? Where's my what line? Which line are you talking about?
Can you go back to the 4-hour? Okay, your sales tool setup, you're taking it to that low, right? That
Yes,
low is, I want to be able to see where that line, where your target lines up on the higher time frame.
right here. Okay. So this was the imbalance you were mentioning earlier. So I could take this. would be the target into the imbalance. Now, back to the higher time frame. That will be that into that order
Go to the
block.
weekly. All right, go to the weekly.
Same thing. That's another order block right there.
And maybe even to that low. Okay.
To which low? This low or this low?
No, I'm just looking at the week. So you have to understand where you see the wick of that weekly candle
Which one? This one? This one.
right below your target.
Below my target. This one.
No, the candle that right there.
This.
See the wick that your target is on?
Mm-hmm.
Where's the wick? Where does that wick end on that candle?
Down here.
Right. So how many pips is that? If the target if price blows past your target, it could go down there and make equal lows. It could wick that low and go higher.
And you mean how many pips from here to there? Or how many pips from where I want to take it to?
From your target to the wick on the same candle as your target.
Okay. From right here to down there, it's 50 pips.
60 pips.
50.
Okay. So if your trade set up, you want to catch it at the 78 to your target, how many pips is that? You can go back to the 4 hour.
Did I mark it?
All you gotta do is hover over your tool, your setup, your short tool setup. 200.
360.
It's a lot of pips.
360, and if I take it down to where, then it will be 413.
So, all right, can you do me another favor?
I'm sorry?
Can you do me another favor?
Sure.
Can you move your entry to the 62 instead of the 78?
Which would be around here.
You don't have it marked up?
Huh?
Oh, you don't have a marking on your chart that says where the 62 is?
Let me put it right there just for you.
You're such a loser.
I'm getting there. Wait, fib right here. Oh. There we go.
Okay, so that would be how many pips if it just went to the 62?
345.
It would be 345 from the 62, and it would be how many from the 78? 360 something?
400.
So 60 more pips. Are you willing to miss the trade for 60 pips? Would you only enter at the 78?
No.
Well, I only asked because you put your tool right there. And if you enter it right there, would you have to protect that next high? The first high wouldn't work.
This one or this one? Which I this
That one
one?
right there.
But it's protected.
Right, but you have it protected. You have the next high protected.
This one.
Yeah, that's what you said when you were
Yeah,
talking.
entering over here. Correct.
Okay, I mean, whatever. That's cool. I don't have a problem with the setup. I would just question only entering at the 78. I mean, it's nothing wrong with that either. Don't get me wrong. You're going to have great trades like that, but you're also going to miss several trades because some trades go to the 62 or in between the 62 and the 78, and they just roll out.
I agree. So what I would actually do, since it's a London pair, I would mark up my midnight open price and see and look for the whatchamacallit, the Judah swing. So once I see an imbalance after the Judah swing or with that Judah swing, an imbalance going down, that would be my entry signal.
Okay, and I'm assuming you're just going to sell this. You're not buying to sell it.
I'm not buying this up, no.
Yeah. I mean, it's all the more reason why your entry matters. If you were buying to sell it, then it really wouldn't matter.
Right. Now, if it was like a bigger move up that I would anticipate, then yes, then I would buy it up.
A
But
bigger
since
move. How many how many pips does that move? I'm asking for a friend.
right,
That's more than 200.
this is at least probably 200.
200.
Let's see. From here. Mm-hmm.
So everybody in the chat, 176 moves, 176 move is not big enough for Elfie. She
Oh my
needs
goodness.
200 and better. I mean, this is the kind of madness that we have going around. I would say if your trading plan calls for you to forego 176 pips, you need to throw that plan in the trash.
All right, I shall consider. I'm out now.
Gracias.
So Todd, what's the entry gonna be for this pair? If you're gonna buy up.
Pull your chart up.
Let me just see the computer real quick.
Come on, y'all. We're gonna have to drop down time frames. What do you have marked up right there?
Yeah, well, I have a different computer. I don't have the Zoom link to it, so I have to go to my laptop to see if I can get it done.
Whose chart is this?
This is me,
Oh, this is Elfie.
the same one. Mm-hmm.
Okay. So, yeah, I was gonna say y'all got the same candle sets. But
Yeah, I'm looking at this one too.
yeah, you could have left your thing on, Elfie, that had your little info. Your
The
little,
indicator?
your little breaks instruction.
Well, I mean,
Well, put it back on.
it's still ranging for me.
It's too what?
I don't really see a significant, whatchamacallit,
A
break of
significant.
yet.
Well, that's your problem. So what does that thing tell you right there? Break a structure to the top side. This
It
is
says
exactly.
it says equal highs.
Let's look at it. Is it equal or is it a break? Is a wick go above that other wick?
This one does, yes.
Okay, so that's a break, man. And this is the problem with traders. If you fib from that up move where you got that chalk to that pullback, what does it give you?
At 88.
Bruh, you in the trade and you're in profit. But because you don't believe that that's a break, you wait.
So entering on this one would be where? Since this already hit the
Well,
88,
listen, I mean,
then we would have to take this one.
no, I have a problem with traders who why didn't you take that trade? If you
I wasn't looking at GA at the time.
hold on, okay. But as a trader, if you know that this trade has sold, same way GN sold this week,
Mm-hmm.
and you know Friday, it's going to give you that wick.
Mm-hmm.
Does everybody believe that, or they just hear some people say it and talk about getting catbird, and they don't ever believe that they can do it? If you believe in the concepts, hey man, this is going to push down, and then at the end of the week, it's going to give you a wick. Just like at the first of the week, it's going to create a wick.
Yes. And this would have been the catbird position right here.
Could have been catbird. Now, maybe this week you go a little bit below that. Maybe it takes liquidity. Maybe it pushes down, takes liquidity from the bottom,
Mm-hmm.
eyes up. Or maybe it just goes and gives you an equal low and pushes up. But at either point, it needs to break. It needs to break a structure to the top side, pull back the same way this one did before you get in.
Yes. So when you say equal lows, you would want to be this to be taken out, or this it doesn't matter.
Well, I would want my bottom low to stay intact, because that's my swing. That's the 4-hour low, right?
Yes.
I want my swing low to stay intact. If your swing low gets broken, it's cool too. But if the swing low gets broken, what is your expectations?
Then it's bearish.
Okay, but where is it going to pull back to? Go back to the 4-hour chart. If it goes down and breaks the swing low, where should it pull back to?
I would have to fib this part.
But no, keep going higher, because it's pulling back to the imbalance, right?
Oh, right here.
Yeah. Then I'm not looking for it to go to the 78.
Yeah, so you're saying if this is being broken, then this is the swing that I would have to fib in order to figure out where it's going to
But
go.
you can see the imbalance right there. You don't have to fib nothing. You see the imbalance. You see where the imbalance is. You got it marked up already.
Yes. So to answer his question,
You're waiting for a pullback, right? You're waiting for a pullback. Like it's going to break that high and pull back, or it's going to pull back and give you a double bottom. And still, I would wait for it to break and pull back. That first hour of trading, we're going to see something. It's either going to push higher, or it's going to push to the low. And if it pushes to the low, if you believe in the concept, you can get in. If it pushes and breaks that high, you got to wait for a pullback before you get in.
got it. Did that answer his question?
Yeah, it does. Thank you.
Okay.
If y'all aren't putting if you're not marking your charts up and putting alerts on your chart, you're probably not going to remember half this. I think EA has the same setup, right?
Yes, it looks similar.
And EN and GN are very similar as well. I think the important thing to remember with the EN or the GN is that you need to have your monthly stuff marked up too, because I don't think they are, I mean, I feel like we need to push down into that monthly order block the same way that EA and GA does, but it's a little bit different. The setup is a little bit different. But if you don't have it marked up, then you might lose track of where price is actually going, how far you expect it to go. You also have to pay attention to if it breaks daily lows or weekly lows, because you'll expect a pullback and then a continuation in that direction. I think EA and GA are probably closer to those key level lows. I think they push further down into the order block than GN and EN have.
Yes.
But it's still like three or 400 pips it has to go. So I don't think we'll see it, you know. But in the case that it does, if it just keeps pushing down, you got to pay attention to the lows that it breaks. I would mark them up with the same way we kind of did with a line, you know, saying, hey, 4-hour swing low or whatever.
All right.
Gracias. What else y'all trading? All right then. Everybody got their bread. Everybody got what they need, right?
Yeah.